Welcome back, fellow investors. Today, we're diving into the exciting world of real estate investing. Whether you're a beginner or someone looking to expand your investment portfolio, this video will serve as your comprehensive guide to get started on the path to financial success through real estate. Let's jump right into Real Estate Investing 101. Real estate investing has long been a proven wealth-building strategy, and it can provide both passive income and long-term appreciation. But before we get into the nitty-gritty details, let's cover the basics. The first question you might have is, why should I invest in real estate?
Well, here are a few compelling reasons.
1. Tangible asset. Unlike stocks or bonds, real estate is a tangible asset that you can see, touch, and control. 1. It provides a sense of security and stability. 2. Cash flow. Rental properties generate regular cash flow through rental income, allowing you to build passive income streams. 3. Appreciation. Over time, real estate tends to appreciate in value, giving you the potential for long-term wealth growth. 4. Tax benefits. Real estate offers numerous tax advantages, such as deductions for mortgage interest, property taxes, and depreciation. Now that you understand the benefits, let's explore the different types of real estate investments you can consider. 1. Residential properties. These include single-family homes, duplexes, and apartment complexes. 1. Residential properties are often popular among beginners due to their familiarity. 2. Commercial properties. This category encompasses office buildings, retail spaces, warehouses, and more. 2. Commercial properties can provide higher rental yields but often require more capital to get started. 3. Real estate investment trusts, REITs. REITs allow you to invest in real estate without directly owning properties. 3. They trade on the stock market and offer a convenient way to diversify your real estate portfolio. Before diving into any investment, it's essential to consider certain factors. Here are a few key aspects to evaluate. 1. Location. The location of a property plays a crucial role in its potential for appreciation and rental demand. 1. Look for areas with strong economic growth, amenities, and a stable housing market. 2. Cash flow analysis. Conduct a thorough analysis of potential rental income and expenses to determine the property's cash flow. 2. Consider vacancy rates, property management costs, and maintenance expenses. 3. Financing options. Explore different financing options, such as mortgages or partnerships, to determine the best fit for your investment goals. When it comes to real estate investing, due diligence is key to minimizing risks. Here's what you need to consider. 1. Market research. Conduct thorough market research to understand supply and demand dynamics, rental rates, and vacancy rates in the target area. 2. Property inspection. Always get a professional inspection done to uncover any potential issues or repairs needed before making a purchase. 3. Risk mitigation. Consider having contingency plans, such as setting aside funds for unexpected repairs or having insurance coverage to protect your investment. Successful real estate investors understand the importance of building a reliable team. Here are some professionals to consider having on your side. 1. Real estate agent. A knowledgeable and experienced agent can help you find suitable investment properties and negotiate deals. 2. Property manager. If you plan to invest in rental properties, a property manager can handle day-to-day operations, tenant screening, and maintenance. 3. Accountant. CPA. Having a qualified professional to advise you on tax matters and help maximize deductions can save you money in the long run. Successful real estate investors understand the importance of building a reliable team. Here are some professionals to consider having on your side. 1.
Real estate agent.
A knowledgeable and experienced agent can help you find suitable investment properties and negotiate deals.
2. Property manager.
If you plan to invest in rental properties, a property manager can handle day-to-day operations, tenant screening, and maintenance.
3.
Accountant, CPA. Having a qualified professional to advise you on tax matters and help maximize deductions can save you money in the long run.
4. Real estate attorney.
A real estate attorney can assist with legal matters, review contracts, and ensure you're in compliance with local laws and regulations. Let's discuss the different financing and funding options available for real estate investing. 1. Traditional mortgages. Obtaining a mortgage from a bank or lender is a common way to finance your real estate investment. 1.
Consider factors such as interest rates, loan terms, and down payment requirements.
2. Private lenders. Private individuals or companies can provide loans for real estate investments. 2. This option may offer more flexibility, but interest rates and terms can vary. 3. Partnerships. Joining forces with other investors through partnerships or joint ventures can help you pool resources and share risks. 4. Self-directed IRA. If you have a self-directed individual retirement account, IRA, you can use it to invest in real estate, potentially enjoying tax advantages and growing your retirement savings. Now, let's explore a few common real estate investment strategies you can consider. 1. Buy and hold. This strategy involves purchasing a property with the intention of holding it for an extended period, generating rental income, and benefiting from long-term appreciation. 2. Fix and flip. In this strategy, you purchase a property, renovate or improve it, and then sell it quickly for a profit. 2. It requires careful market analysis and knowledge of renovation costs. 3. BRRRR method. BRRRR stands for buy, rehab, rent, refinance, and repeat. 3. This strategy involves purchasing undervalued properties, renovating them, renting them out, refinancing to recover your initial investment, and then repeating the process. 4. Real estate investing is a dynamic field, and continuous education is essential for success. 4. Here are some ways to stay informed and continue learning.
5. Books and resources. Read books on real estate investing, personal finance, and related topics.
5. There are many valuable resources available to expand your knowledge. 6. Networking. Attend real estate investing conferences, seminars, and local meetups to connect with like-minded individuals, learn from experienced investors, and build a strong network. 7.
Online communities. Join online forums, social media groups, and real estate investing communities to engage in discussions, ask questions, and share experiences with fellow investors. And there you have it. Real Estate Investing 101, a beginner's guide to building wealth. Remember, real estate investing requires careful research, due diligence, and a long-term mindset. Start small, educate yourself continuously, and don't be afraid to take calculated risks. If done right, real estate investing can be a rewarding journey to financial freedom. Host. If you found this video helpful, give it a thumbs up and subscribe to our channel for more valuable content on personal finance and investment strategies. I'll catch you in the next video. Happy investing!